This article will provide you with everything you need to know about the Elliott wave. We'll look at what it is, how to use the Elliott wave indicator in Forex trading, what you need to know about the Elliott wave principle, what is the Elliott wave oscillator, and more. What is the Elliott wave? Elliott wave is a theory that mathematically explains mass behavioral patterns. Nowadays, this theory is used as a part of the Elliott wave indicator for trading platforms such as MetaTrader 4 Supreme Edition, MT4SE. This indicator gives you a decisive edge when it comes to trading Forex, thanks to its ability to show potential future moves. Elliott's wave principle. An accountant by the name of Ralph Nelson Elliott was the sole creator of one of today's most widely known ways of analyzing the markets. He created the Elliott Wave Theory in the late 1920s, thus breaking the idea that markets moved in a chaotic way. Elliott realized that market movements mainly consisted of investors' reactions to different macro stimulus. Moves to the upside or to the downside can be seen repeating in the same patterns, regardless of the outside stimulus. Also, it can always be divided and analyzed into smaller moves known as waves. Traders were then able to predict the repetitive cycles of the market for the first time, or so they thought. Anyway, Elliott's wave theory is partially based on the older theory of Dow. The difference between the two theories, however, is that Elliott discovered the more fractal nature of the Forex markets. So let's break down this Forex trading wave indicator further. The Elliott wave stipulates that prices move in wave formations that can be seen as directing price movement. This allows you to categorize any given price movement into impulsive moves or retracements before the price changes its overall structure. Over the course of time, this complex form of market analysis has become widespread among professional traders. More detailed studies have been conducted by A.H. Bolton, Charles Collins, and later the theory was completely covered in Robert Prechter's book Elliott Wave Theorist. In simple terms, Elliott wave analysis shows traders' behavioral patterns on a chart. It's worth noting that Elliott never intended to apply his findings to individual stocks, because the low activity environment of the time caused inconsistent mass behavior patterns. This was aligned with Dow's views when he created the industrial average. And even when applying this methodology today, every decision has to be applied with caution when it comes to individual stocks and currencies. Introducing the Elliott wave oscillator. After discovering that price moves in repeating patterns, Elliott noted that price moves can mislead the trader on whether a formation has occurred. He solved this dilemma thanks to a Forex trading wave indicator that he called the Elliott Wave Oscillator, UO. The UO allows a trader to see when one wave ends and a new one begins. This outstanding Forex wave indicator is widely known as the 5/34 oscillator because it's a 34-period simple moving average subtracted from a 5-period simple moving average. The UO's strongest reading is always a clear signal of the placement of the third wave. It's a great Forex wave indicator because it always has a strong correlation with Elliott wave patterns. This makes it ideal as a filter of fake ones.